Hello and welcome to lesson 4 of our 11-part stock analysis course. In the previous lesson, we learned how to track companies' performance throughout the year using quarterly reports and thank you filings. But financial filings only tell part of the story. After every quarter, management gets on a live call with analysts and investors to explain the results, answer different questions, and discuss what's happening behind the numbers. In this lesson, I'll show you how to read earnings call transcripts and extract the insights that most beginner investors completely overlook. Imagine being able to sit in a room when the CEO and CFO of company answer direct, challenging questions from some of the sharpest financial minds on Wall Street. That's exactly what earnings call transcripts give you, and they're completely free. Let me show you how to use them. 4 times a year, after each quarter's results are published, the leadership team, usually the CEO and CFO, and sometimes some other executives, host a live conference call with institutional investors and Wall Street analysts. The call has 2 parts: prepared remarks, which are about 15 to 20 minutes, where executives walk through the results in their own words. And then we have a Q&A session. Analysts from major banks asks questions in real time, and management answers live. The full transcript is posted on the Investors Relation page, usually within 24 hours of the call. The CEO typically opens with a narrative overview, the highlights of the quarter. Here's what to extract. What did they lead with? The very first thing they talk about is the thing they want you to focus on. Is it revenue growth, a new product, an acquisition? That tells you what management considers most important. What's the tone? Confident and specific, or vague and cautious? Are they explaining or excusing? There is a big difference between revenue was lower because we deliberately shifted customers to annual subscriptions, and revenue was lower due to challenging macroeconomic conditions. Then the CFO gives a detailed financial walkthrough. Follow along with the actual financial statements open in another tab. When they say operating margin expanded 200 basis points, verified. Does that match what you see in the numbers? The Q&A section is the most valuable part of the entire call. Analysts have done their homework. Their questions are pointed, and management has to answer live and unrehearsed. Here's how to approach the Q&A. Listen for evasion. When analysts ask a direct question and the executive answers with 3 paragraphs that never actually address what the question asked, that's a signal. Learn to recognize the non-answers. It usually involves pivoting to a different positive talking point rather than addressing the actual concern. Track recurring questions. If the same concern comes up from multiple analysts in the same call, like gross margin pressure, slowing customer growth, rising competition, that tells you the analyst community is worried about something. Pay attention to it. Compare calls over time. Read the transcripts from the last 4 to 6 quarters in sequence. Look for promises management made in earlier calls. Are they following through? Did the Q3's strong pipeline actually materializes as revenue in Q4? Here are some phrases that are worth paying special attention to during the earnings calls. When management says we remain confident in our long-term trajectory, it often means short-term results weren't as strong as investors hoped. Headwinds in the macro environment usually means they're pointing to external factors like inflation, interest rates, or weaker demand. We are laser focused on execution can be a sign that management is acknowledging past operational challenges and working to improve results. When you hear record revenue, record earnings, or any other record metric, that's generally a positive sign, but always verify the numbers yourself. If management provides a guidance range, pay attention to whether they emphasize the upper or lower end. Their tone can reveal a lot about their confidence. And finally, if they say we're not going to comment on that today, there's often something sensitive happening behind the scenes that's worth monitoring. None of these phrases are definitive or on their own. Think of them as tools that help you ask better questions and dig deeper into the business. Here's your action step after this video. Pick a company you're interested in and read the last 1 or 2 earnings call transcripts. Don't worry about understanding every financial detail yet. Instead, focus on the tone of the management's communication. Ask yourself, what topics do executives emphasize most? Do they sound confident and specific or vague and cautious? Are analysts repeatedly asking about the same concern? The goal right now is to start developing pattern recognition, learning how management teams communicate when things are going well versus when problems may be emerging beneath the surface. If this lesson helped you better understand how investors evaluate management communication, make sure to like the video and subscribe so you don't miss lesson 5, where we'll break down the press releases and news announcements and learn how to separate meaningful developments from market noise. And as always, leave a comment below with the company whose earnings call you're listening to first. I'll see you in the next video.